And today I wanted to go over a quick infographic from Keeping Current Matters. It's titled The Impact of Changing Mortgage Rates. And basically, there are just a few factors of home affordability. So, the three factors of home affordability are going to be the house price as the first one, interest rates as the second one, and then your income as the third one. So obviously, people, hopefully are raising their income year over year, continually making more, whether it's at least keeping up with inflation or whether you're becoming more established at your job or in your profession and just doing better and making more money as a result of it. But for a lot of people, income doesn't necessarily increase drastically year over year, and home prices have been going up pretty dramatically year over year for the past several years. People were expecting that to slow down when interest rates more than doubled from the start of 2022 to the end of 2022. And they're still elevated. They're not quite where they were at their peak back in late October and early November of 2022. But interest rates are still elevated and home prices haven't dropped much. So what we're mostly going to be focusing on as a potential home buyer is, okay, how are interest rates going to affect my monthly payment for my principal and interest payments? So one thing to note here, these calculations are just using principal and interest. So it's not including your property taxes or your homeowner's insurance. So those are other things that you would definitely need to factor in when you're thinking of buying a house. And then also, if you do have an HOA payment or anything like that, that would be another factor that you're going to have to account for then. So when you're looking at this chart here, this just shows the home loan amount for certain price points. So this is an actual loan amount. This isn't the purchase price. So say you got a $300,000 house, you put 50 grand down, you have a home loan amount of $250,000. Then with a 7% interest rate, your monthly payment is going to be $1,663 approximately per month. If you drop that down just a 0.5%, you're going to save $83 a month. And if you drop that down another 0.5%, so down to 6%, you'll save $165 per month. Obviously, as you increase your home loan amount, that number is going to make a bigger difference because you have a larger loan balance that's going to be basically affected by the mortgage rate there. So what you're looking at here for $450,000 house, the difference between a 7% and a 6% loan would be almost $300 per month. And if you have an $800,000 loan, that difference would actually be about $525 a month. So that's kind of what we're looking at when it comes to changing mortgage rates. For the most part, this year in 2023, mortgage rates, they've fluctuated probably more so than times in the past, but definitely not like they were last year in 2022. They actually are up a little today. They hit their 2-month high today, and a lot of that has to do with the debt ceiling and what's going on with the government. So hopefully once that gets resolved, we'll see interest rates go back down, because as of right now, I'm looking at Mortgage News Daily. They have the national average for the 30-year fixed rate loan at 6.9%. If you're getting an FHA loan, it's usually close to 0.5% below that. In this case, today, it's at 6.55%. So that's kind of what we're looking at as far as mortgage rates. Again, it hit 2-month highs as of today. I'm expecting that number to go down by the end of the year, just based off of everyone that I've talked with in the industry. So I wouldn't be surprised to see it in the low sixes by basically like the end of summer, early fall, and then potentially even creep into the high fives. The thing that I do want to stress, if you are looking to buy a home, um, we have seen a lot of buyers basically jump into the market once interest rates go down. And I don't have any reason to believe that that will change. So basically, if you are looking to buy, you found the perfect house, and you're just like, hey, I want to wait for interest rates to go down. I would just caution you against that, because here in Northeast Ohio, depending on that price range that you're looking at, we are still seeing multiple offers many times. And if you want to wait for interest rates to drop even more, I think that you're just going to be waiting for more competition to come into the market, and potentially, sure, you'll have a lower interest rate, but you might have to pay more in order to get your offer accepted. So you'll have a higher loan balance with a lower interest rate, as opposed to having a lower loan balance now. Sure, you're at 6.9% as of today, but do we think that it's going to stay at 6.9% for the foreseeable future, or are we likely going to see it go down? I'm hoping and betting that it will go down. But again, that's only an answer that you can decide. And obviously, you need to be able to afford the mortgage of what it's currently at. Otherwise, this is kind of a moot point, and and you honestly can't look at a home that's out of your price range, or you shouldn't be, I should say. So that's just my 2 cents for today. If you have any questions, or if you're looking to buy, sell, or invest in real estate in Northeast Ohio, I serve the Cleveland, Medina, Lorain, and Akron markets. So several counties there that I touch. But yeah, feel free, reach out to me. If you have any specific questions, I'd be happy to help you as well. Thank you, and have a great day.